traders, Gary Wagner here, just about 12:30 in Honolulu, 6:30 in New York. It is Monday, June 25th, 2018, and this is the Daily Report for Gold and Silver. Even with a weaker U.S. dollar, the precious metals continue to decline. Gold trading off by about $3.40 at $1267.30. A 13-cent decline in silver. Silver currently at $16.32. Now, the dollar lost about 25 points, closing below 94 at 93.92. And the stock market recovered from the lows, but the Dow still closed off by 328 points at 24,252 after trading almost 500 points lower on the day. Bitcoin trying to find some support, closing up about $85 at $62.50. Traders, today, gold exhibited a modest decline, down about $3.40, currently fixed at $1267.30. Of course, that is August futures that we are speaking about. And it's not the amount of the decline that is so concerning today. It is the fact that the result of that decline completed the death cross in gold, a point in time in which we have seen the shorter term 50-day moving average actually cross below the longer term 200-day moving average. And as you will see in some examples, historically speaking in gold, we have had occurrences in which the moving averages would flip-flop back and forth between a death cross and a golden cross over a short period of time. In other words, a sideways trading pattern. But we can also see some instances where the death cross itself forewarned of dramatically lower pricing. So traders, if we go back in time and look at the first occurrence of a golden cross when gold was moving to its historical record high, that occurs, of course, in 2009. And from there, the market moved substantially higher, actually hitting a high above 1900 before we had the market move really into a sideways trading pattern defined by the lows here at about 1550 and the highs at about 1800. And during that period of time, we also saw the moving averages, the 50 and 200, really oscillate back and forth. Then in February of 2013, we had one final death cross that occurred right here. That's this red box, in which we saw the final break of gold from about 1650 tracking down to these first sets of lows that come in right at around 1200. At that point, we saw some sideways trading activity once again, as indicated by the moving averages flipping back and forth. We got our first occurrence of a golden cross following the sell-off at the end of 2015, beginning in 2016, and that occurred right after gold hit these record lows at about $1,000 per ounce. Since 2016, we have only seen one occurrence of a death cross, and that came in right towards the last quarter of 2016. We had gold trading roughly at 1,280, and that forewarned of a price drop from $1,280 per ounce to these lows at $1,120, which brings us to our current market scenario, and that is that over the last year and a half, we have seen the market go into and maintain a bullish demeanor, technically confirmed by the fact that for the most part, the price of gold remained above the 200-day moving average, except for this short instance in December of 2017. And then, of course, the final occurrence of gold breaking below the 200-day moving average, which occurred on May 14th, which signaled lower pricing and is in effect to this day. Based on the fact that today the death cross was in fact completed and the occurrence of the market moving below the 200-day moving average back in May, we could see dramatically lower pricing. Therefore, traders, my recommendation is to maintain our neutral stance with no active trades, and further selling would certainly trigger a sell recommendation. Traders, one of the reasons that we spent the entire show focusing upon these two moving averages, the 250-day average and what we see when they cross, is because we have identified the fact that the death cross was completed today in gold charts. Now, we've seen multiple occasions in which that was a very foreboding signal and we saw a tremendous decline after, but we've also seen instances where it would oscillate and you would get a death cross into a golden cross and back and forth. So we have to see how this market plays out, but with the fundamentals that currently exist, I am expecting lower pricing. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.